Hello guys, today we're going to do a quick focus about a very interesting question I had coming from the French users about my overall goal scenario, the mid to long term goal scenario. Because yes, I kind of understand how confusing this might be to some of you, so I thought about just flushing all those shadows and getting out of foggy areas so you guys have a clear sight. Once again, this is no investment advice in any possible way. I'm just trying to explain how my personal portfolio has been orientated throughout the latest few years, facing the risk of both geopolitical and financial jitter that could come across in the next few years as we're reaching potential slow growth and definitely some shadows and clouds to be coming up the blue skies. And the thing that we need to manage this and balance the portfolio heading into the next few years. But we're really going to talk about long-term trends in here, nothing that you should be taking in consideration for daily trades or even though intraday trades. It's more likely something that's going to play throughout weekly and monthly charts, something that really takes time to play its game. So nothing you should bother yourself if you're an intraday trader or just have to bear in mind if you're a swing trader. But definitely got to be taking a lot of efforts to understand if you are a long-term investor. So what we have in here is going to talk about the gold. So definitely is one of the assets that may be driving people crazy because definitely is something complex, even though to me it's really, really simple. Once again, start with the highest ground you could get yourselves down to if you're doing long-term trends. So we cannot go further than the monthly charts to me, and I mean, delete the price if you have a problem. What the hell is that kind of context, okay? So it's purely and simply a bubble, okay? And here we can clearly see the parabolic moves, the trends is accelerating parabolic and going crazy fucking stupid at the end. So this is not excessive market pricing, which we're just going to require a tiny correction. We have been bubble trading these assets and it's going to crash. It's called speculative investment. Speculative crash is going to come. So is gold going to be bullish or bearish in the future? Regarding and facing what I have in front of me today, I would say bearish, definitely bearish for the next years to come. I would say probably just the next decade is going to be bearish, not even say more than that. So in a long-term perspective, why the hell would you like to have gold? And that's definitely a question that you might wonder because I do have some gold and I very well understand that some people may just get this really wrong. And we're going to start right at the beginning by splitting two very important things. The paper gold and the physical gold, because I do have some physical gold even though I have opposite scenarios in the paper gold, and I tend to believe that at some point something could go wrong, and if it does, we'll see huge difference between the pricing of those two. And obviously, what's the problem? The fucking dollar, which means dollar is the problem in between. And this is something I hardly will explain in here, but I'll try to stick to the essentials. Why do I have physical gold? It's not because I think that the gold is going to rise, because as I said, I think in a technical long-term perspective, and we're talking about monthly charts in here, so to reverse those processes, you really need major changes. And I don't think anything can do anything about that. So I think we're bearish regarding paper gold. In a long run, long-term scenario, we have high probability to get back to 600 more than going back to 200, or no, say 200,000 or whatever shit this is, like the cryptos have been doing back then. So it could be bullish. I stand to believe, I still stand for this, but you can't know for sure. So if you want to buy some gold, I stand on this. That's possible. If you want to buy, then buy physical gold and do it in a fucking buy and hold scenario. Okay, it means you have faith that the gold will rise by the dollar failing. And to be honest, only the dollar huge failure can bring the gold up again. The paper gold, because it's XAU versus USD. So what you have in here takes the USD value, currency value in accountants. So in here, if the dollar fails, definitely this thing will rise. But the dollar has to fail fucking strong to rise that thing. I see very narrow possibilities for this to happen, even though there are some possibilities. Okay, so first, separating gold and physical gold and paper gold. To me, they have two different perspectives. The physical gold is what we call a safe haven on the hardest and highest level of uncertainty demand, which means financial crisis, unexpected crisis, black swan kind of crisis is gold, physical gold, retreat. You're going back to physical gold because there is so much uncertainty in the fiscal and the monetary conditions that you don't know where to store the value, and generally, God knows why, but we tend to go back to gold, which means historically, anytime it's been happening, people searched and seek for gold. And even though I think today the opportunities, the options to secure your money are way more spread than they was before. Before you had just gold to basically go safe haven. So now we've got multiple options. You've got the cryptos, whether you like them or not. These are options. More options means less money available for each option. We're going to spread that amount. So I suggest if you're having half your money in the gold right now, definitely not a good choice. It's way too much. I had 30% gold and I just divided by 2 to go back 15%. So I took some gains out of physical gold, and now I'm going to explain why I had it physical. Because now we're going to have to switch to the SPX, okay? So to me, the financial system just surrounds what's happening in the US. So to me, the US is the stock market, and it's gone pretty fucking irrational because it's been, and we're treating weekly charts. So remember, once again, we're not short-term trading in here. We're really mid to long-term trading. What we have in here, no prices, no lecture biases or anything like that, is overextended, which means overextending a trend brings the level of risk to the higher. Okay, so highest level of risk. So as I said, risk to have a black swan was higher than ever. We've never ever seen anything like that. I mean, look at that. In terms of momentum, we've never gone that high in history. And we're looking at RSI here. So the RSI has been as crazy fucking bullish in a weekly chart as it has ever been. So if you think we're having the previous context, we've seen that before. Yes, we did. Same kind of back then in here. But the context was pretty fucking different. So we'll see, but I tend to believe, nah, this is not something you want to buy. Moreover, now that we have the price breakdowns, which didn't happen back then. Back then we tried, pull back, we're just fine, tried, pull back, and anytime we managed to go rising ourselves even higher, bite after bite. Now we don't. We've fucking broken everything apart, and people tend to believe we're bullish again. So I still tend to believe that we had high level of risk of crazy bubble trading in the US. Therefore, I started selling the US market slowly but steadily, and to be honest, you know, I have a 50K account for speculation. This is definitely not my entire capital, so I'm speculating with a tiny amount of my available money and cash flow. So speculation is just one part of my asset management. This is the one I'm talking to you about when I made those shows, but this is not the entire thing. So I had 30% gold, now back to 15, and it was physical gold, because when I saw this, I said, all right, you guys are going crazy, so high level of risk to show a black swan coming out of nowhere, and therefore I want to have some physical gold, because if it shows up, I definitely want to be profiting from your losses and your panic, because if you had a panic on top of the dollar system itself, because this was just concerning the US. Why am I targeting the dollar right now? Because this is only happening to the US. There's not a single economy worldwide that has the same freaking overextended trend at the end. So the US are isolated right now because of Trump's policy. I tend to believe that this is going to have negative side effects that will show up later. I still don't know, so I'm managing my fucking risk. How do I do that? I'm selling with my speculative portfolio until I've got proven wrong. And if I get to be proven wrong, I'll change my mind, but I'll still looking at selling this only. I'm not buying anything in the US in the current conditions. So that's it, selling for the speculative portfolio, which is just a part of my entire global capital. I still have 15% gold in the backside just in case we do have an unexpected black swan to show up. But now, why did I split it this half? Why did I got down from 30% to 15% physical gold in my entire asset management? For a simple reason. Now I think we have a brighter perspective for the US. Not to say that in the long run it's going to be great, that is going to be great in the short term, but in the long run, what I see in front of me is a good sign that the economy just doesn't want to go crazy parabolic pricing. Because if we did, it would have been the worst case scenario, not to say we would have rise to something unexpected like 8,000 for the SPX. I mean, why not? That's possible. If this thing happens, definitely means the dollar is dead. And if the dollar is dead, I definitely don't want to hold and own any stock valuation in dollar, nor even a dollar in my portfolio. So, facing this, where do you put your money? We had risk of Eurozone to explode. We've got China slowing down. So where the fuck did you want to store the value? High level of explosion in the US with a speculative burst on the dollar, and definitely don't want to have dollar in that perspective. People will want to have that in the short run. It means we could have had in here a surge in the dollar, surge in the US valuations, and everybody wanted to have dollar or stocks in dollar, and definitely not going to end well if this thing would have happened. So therefore, I would have had something else. And this would have been physical gold. Simple as that. What I would have done is basically this, storing the risk of a total explosion of the financial system, because, I mean, everything runs in dollar right now. The worldwide economy turns out of dollar, so if the dollar goes crazy, the entire financial system would have gone crazy, and it means your ATMs will never have worked again, and you would have been pretty fucking happy to have some gold available to buy some stuff in a financial crisis. But nowadays, we've got more information. I mean, I started buy some gold back in late 2017. Now, I think we've passed that. We've got more information. If we get to look at in the daily chart, I mean, back in 2017, we were just there, overextending the trend. We had early signs of trend exhaustion, then risk rising. So I got 50% in, 30% when I saw this rising parabolic like shit. And now we have this. We have signs that the market isn't irrationally pricing things. Quite the opposite, actually. We are now going down, so we're now assessing those risks. And we'll see, future will tell us if we're getting out of that risk area and forecasting this to be just a trouble, and then we're probably going to rise crazy hell like shit, and I'll just do what? Buy another 30% gold, or buy another 15% gold, and just let it go with the dollar. Let the DOMs buy the shit, so they'll lose the money in the end. All I care is that I will just let go. I'll stop selling the US, I'll stop selling the dollar, I take my stop losses, I'll see people driving themselves crazy buying that shit, and I'll just wait for this to collapse. That's simple as that. What I want in that stage of a very high risk end of economic cycle, I just want to make sure not to make the bad decision. That's all you should care right now, not making the best decision to make a shit ton of money. All you should care about right now is protecting your asset from the potential downside that may come, and that is just going to destroy whoever's been taking stupid decisions. So, rational decision is not to make a shit ton of money. Really, save your assets and avoid getting into places of interest, in getting into where people want to put their own money, because they will be the loser for most of them, and you don't want to be among them. You can even try to take down their money if they're doing it stupidly. Like, if they want to buy some US stocks and buy some dollar, I'll let you buy that shit, and then I'll sell it to you when the prices will be stupid crazy high. That's simple as that. I'll try selling again, definitely, but not now. If I'm proven wrong about the current stage, I'll just change to something else, but definitely not going to change my mind. So, the SPX on the current stage right now, and the new informations we have in the short run, is, to me, I have early signs of structure about the stock market currently pricing. Back then, I saw this overextended trend, parabolic ski move, bubbles, to be honest. It really is a bubble pricing in here. And I said, okay, you really want to go bubble from the stock market, you're going to have dangerous side effect if you do so. And as I didn't know how to trigger this, buying gold was the only solution. Now I've seen coming back to normality without bursting it entirely, like no money available from ATM, riots and everything like that. Just went fine. We had volatility and then central bankers just turned it off. It was problems, no problem. Don't worry about the volatility, we're taking care of this. So what we know is that the central bankers will prevent volatility from going out of control. And we know that for sure right now. At least that's the market. That's what the market believes. So as long as it isn't proven wrong, we assess that the volatility will be handled by the central bankers. But the central bankers cannot handle prices to go higher. Only investors can buy to push price higher. And I tend to believe that investors won't buy those resistances. More likely they will sell this. But next time central bankers will show up again and prevent the volatility to go in out of control. We've got strong supports, long-term supports area in here that will probably act as accordingly. So I still tend to believe that what we have in front of us is a bearish range. We're going to go down more than we go up, and we're going to do it with strong and deep retracements, which means there is no bearish consensus in the market, not everyone capitulating, but more likely oscillating between euphoric and panic with some fears and hopes in between. And therefore, I still tend to believe that this is not the kind of structure that prevails for a black swan risk. More likely the kind of structure that slowly but steadily destroy the bubbles here and there. Bubbles will burst one after another, not all together, that will prevent from triggering the systematic risk. And therefore, to me, the risk of a black swan has been narrowed since we started those structures. Therefore, I'm limiting my exposition to gold. We're below resistances. We've been reaching out my speculative targets. I took my profits on the speculative trades. I'm also selling half my gold. I still have some. But I need you guys to understand that. Gold to me is just here to protect from something unexpected, which is the financial system to collapse by a systematic risk with a shitload of liquidity like we've ever seen. We've never seen that, ever. So we've never experienced a black swan with that much and that high level of liquidity. So the current context, we've never seen anything like that. So if something really ugly shows up unexpectedly, we don't know how to face that. And goddamn, yes, I want to have 15% gold just in case. Even if that gold has to be losing 50% of its value. Do you really get that? 15% of my entire portfolio losing 50% valuation. I see no problem with that. But if things really go out of control, I mean, if the dollar just fails like shit and worth nothing, if you just have 15% gold, that makes 20 or 30 times the reward. Oh, goddammit, yes, I would be happy to have 15%. But this is definitely a buy and hold. This is not something I want to make return out of. It's something just in case. Just like my fucking Bitcoins. I don't want to sell those Bitcoins. Some of them, I'll just buy and hold them forever, just in case it's worth a lot of money someday. But not just to sell this for money. More likely just to use this as a currency. Just like gold can be used to transfer value between any other currencies. This is why I really insist on this. Gold's only value in today's, and to be honest, you need to be aware of something ugly about tomorrow. You know that we're rising knowledge in industrial sectors and everything like that. Maybe someday we'll be able to build gold, build out of carbon atoms, and be able to layer them in a structure that is identical to the way it's been done with minerals, processes that take billions of years. And if we're able to do this someday, then gold will just worth shit, because if we're able to replicate this without making the difference between mineral processes and industrial processes, then if that day shows up, then gold will worth shit. It will lose its entire value storage potential. Maybe to something else, but in that perspective, you just lose it all. So bear that in mind. It's also a risk. There are not just upside risks for the gold, there are also downside risks as well. So the only thing that you may know is that if you do paper gold, to me, the odds are to the downside. So you don't buy paper gold. You most likely sell it. And to be honest, let's get back to gold. In a daily chart perspective, my targets are pretty much failed right now, so all I'm doing is waiting either for a selling signal, so let's put the prices back in game, in a daily chart, or more likely weekly. Okay, so to me, odds is either we stop in here and build a range, just like we did before, and the breakdown of those range will be a start to trigger for me, because it will be a context, a dangerous context, in which we'll do context. Remember those patterns. When you do context, pull back to trend channel. Okay, so we will have order extend just a bit. Back to support context. If we do this, mean rejecting the trend channel without touching the boundary, the opposite boundaries of the context channel, means we're accumulating for a trend. And if such thing happens, I definitely want to be bearish trending in here in the future big bear trend we could have on the dollar, reaching to 900 and probably lower than that, probably seeking for those supports in the long run, which is pretty damn low. Yes, it will be dividing gold prices by 2. And therefore, I'll lose 50% of my value stored in gold, in my physical gold. But 15%, and if things has to go ugly with the economic cycle, meaning the US keep on going, rising forever, and going into an even further in a bubble-ish trading, if we do that, god damn, yes, I want to have 15% gold at least. And I'll definitely buy some later on, but not right now. All right? So if we go bearish, I mean, if the US decides to go crazy bubblish, you can be damn sure that the gold will just fall first and then rise like hell. So if this happens, I think the gold will go in here, bear trap, and rise. If we do have that, I think this is because the US will wrong foot the bears, and they'll basically start to rise like shit in valuation. But the problem is it's going to be done against the dollar, which means the dollar will fall like shit. And in that perspective, the only thing you want to do is just buy some gold. You don't want to sell, you don't want to buy or to sell the stock market. You just let it go with the stock market. It will be crazy irrationally pricing to the upside like a Bitcoin would have done back then. So you just let it go. Okay? Valuations in dollar will just mean nothing because the dollar will lose all its value. And therefore, what you want to do, buy some gold. That's all you want to do. Buying some gold, selling some dollar, and you just let it go. That's simple as that. If we do this, that's an option. And in that perspective, you don't want to buy paper gold, you want to buy physical gold. All right? So bear that in mind. These are all the options we have. To me, if nothing unexpected shows up, or if we don't go crazy bubbly trading in the US, everything suggests paper gold should go to the downside as well as physical gold. But if you do want to buy some, it's only physical gold, and you must be aware that this is a 10-year trade, and you're just taking this just in case something ugly happens. Must not be more than 15% of your entire assets and global asset management. Therefore, if you do that, I think it's fine. If you do more than that, you're just pricing in a risk that has very, very narrow chances to show up. As so far, odds suggesting that we're just going to burst the bubble one by one, heading prices to the downside, but slowly, steadily, and with a construction. We're going to build this downtrend slowly but steadily, and until further notice, I see this as a decreasing risk for unexpected catalyst like black swans to show up, most likely a gray rhino kind of reversal. We're late stage of trending, we're probably ending the economic cycle, but we got monetary support to avoid these entire things to just collapse. So it's just a price management. But I don't really think we're going to break resistances anymore. As long as we're not proven wrong, this is what I forecast. Then future will tell. You know how it is. I'm closely having a look at the US indices, obviously, because this is where the big game is playing. And obviously, if we're heading historical highs and accelerating crazy parabolic, and that's an option, we could very well do this. If we do this, you know what I'm going to be doing. Definitely not selling the stock market, but selling the dollar and buying some gold. Physical. If things play accordingly, I'll just maintain low exposition to physical gold. I'll probably sell the paper gold in between. And yes, it means we're going to have selling on stock market and selling on the gold. I know how stupid this may look like for some guys, but in a speculative perspective, that's definitely what sounds to be the most rational move to play in the next forthcoming year. Selling the damn gold, paper gold, even though owning a little bit of physical gold on side of this for a totally different perspective, and just playing accordingly. downside risk on the equities, downside risk on the gold, and making money out of this to just purge the shit we got all around us and start all over again with better risk managements. We've been taking too much risk. We're very late stage trending. At this point, a correction is just salvatory. It's just good. I mean, to me, it's like Black Friday. We just have some price devaluations getting back to very interesting long-term prices entry. And for a long-term portfolio manager, I still tend to believe that, yes, if we do correct 40 to 50% of prices, it's definitely an area in which they'll be buyable for another cycle. So not the end of the world coming along the way, at least not the way I see that, and not until we maintain that bearish perspective to slowly but steadily grinding our way down with some bites by bites movement like that. It's like panic selling, VIX rising, and then bam, VIX control, ranging, VIX selling, control, ranging, VIX selling, back to support areas, and then we buy it out. Simple as that. To me, it's how it's going to happen. We're going to go down, and anytime we go down, we're going to have more buyers, but we're going to fail until the day we're going to start rising and breaking the previous resistance. And in that perspective, we'll say, okay, we're probably about to restore another cycle, another trend with new profits from the companies and things like that. But when you see all the bubbles like Netflix, Amazon, Facebook, Google, Microsoft, all of this just has to lose a shit ton of valuations. A shit ton of dollar will be destroyed among the process. So I cannot forecast a bullish dollar and hardly as well bullish stock market. But future will tell, everything's possible, and therefore physical gold seems still to be necessary until proven wrong, which means as long as we don't have lost at least 40% of valuations in the stock market, I want to have physical gold just in case everything falls out of control.